Let's hit on EBITDA. This video here is called What is EBITDA? Now, EBITDA is earnings, root word, earnings, before interest, taxes, depreciation, and amortization. Now, if you can read that, you're doing good. EBITDA, earnings before interest, taxes, depreciation, and amortization. So basically it's saying there are certain aspects of a net revenue calculation or an earnings calculation. It's very closely relative to the net revenue or the earnings though. So I don't want you to get too fixated on EBITDA being calculated much different than what you see on net revenue. Now, when you go to sell your business, it is important that there is a process to come to an actual EBITDA number. What would be required is, of course, good general accounting, having a profit and loss statement, using something like QuickBooks or Oracle or something that I have a profit and loss statement for multiple years. When you go to market and you start talking to private equity groups or platform companies, they're going to want to be able to have the amount of data necessary to come up with a good value of your book and your business, your agency, your operation, and they cannot do that without those statements. EBITDA is simply earnings with a few concepts of add backs. I will tell you though, a lot of people are running certain expenses through their company that they probably wouldn't once it was sold and they no longer own the majority of it. Once you had a private equity partner, they would probably gate that more because they're more worried about net revenue or earnings growth. And so you want to look at those, siphon those off, and decide what would be expensed in the future versus what is being expensed now, so we can reduce those and add those back to your bottom line. That's what EBITDA is. What is EBITDA? Earnings before interest, taxes, depreciation, and amortization, but don't overcomplicate it.